Hello, today we are going to solve Jan 2020 question number 6. Maria is in the business of buying and selling printers and ink cartridges. The following information is a summary of her inventory movements for the 3 months ended 31st December 2019. So some information is given. Explain the meaning of the following terms as they relate to inventory. The first one is the historic cost concept. It states that the inventory should be recorded at the cost at the time of purchase and not at its current market value. So that means you should not make any adjustments to reflect any inflationary fluctuations in the market. The next question is net realizable value. It is the value of the inventory that is less, which is the value of the inventory which is taken at lesser than the cost. So it is difference between the expected selling price and the cost that can be incurred to make it saleable. Like for example, if the selling price of the car, okay, if the purchase cost price of the car was 14,000 and the sale price was 16,000 and it incurred some cost or of repair and commission, say 400, you subtract the selling price, okay, from this, and you will have to record the valuation of the inventory will be lower of the NRV or lower of the cost is recorded. Then next one is calculate the number of items in the inventory for each of the two products. So let's calculate. So the first one is the inventory as on 1st October 2019. Okay, the value is 16 and 20. Okay, so let's write 16 and 120. And then you have purchases. So then purchases, so you have 48 and 290. And then you have purchase returns. So there was no return of the printers. So let's write here. And then 16 numbers were returned back. So 16. So let's calculate, okay, what was the inventory at this point. So it is equal to 64. Okay, add these two. And this one we have to subtract because it has left the business. Okay, purchase returns has happened to the back to the supplier. So 120 plus 290 minus 16. So that is equal to 394. Then you have some sales happening, okay, in the business. So and some inventory is going to go down. So sales. So sales of 50 and 300. So 50 and this one is 300. So let's write. And so this has reduced the value of inventory. So I'm going to less it. Okay. And then you have sales return. So it came back into the business. So let's write that. So that's going to be a positive value. So the inventory number is going to be positive here. And here nothing happened. There was no sales return for cartridges. So let's add up the remaining inventory as on 31st December 2019. So let's add 64 minus 50 and plus 1. So the value is going to be equal to 50. And here the value is going to be 394 minus 300. So that's 94. So the inventory left is 15 and 94. Okay. Then he is telling part C of the question. Calculate Maria's gross profit as a percentage of revenue on each. So let's calculate the gross profit. So the gross profit is going to be equal to, okay, let's write revenue. Okay, revenue. The revenue was at the selling price was 80. So how much was the sales? 50. The number was 50. Okay, so revenue was 50 into 80. So that's going to be equal to 4000. And then you have revenue returns. So the revenue return, sales return was 1. So add the cost of 1 into 80. So less revenue returns. So that is nothing but 80. And then, so revenue returns. So let's, and then this value is going to be around 3920. Okay, 3920. Then you have some purchase, the opening inventory. The opening inventory was around 16. So let's write that opening inventory. So 16, and the cost was the purchase cost you have to take. So 1 times 75. Okay. So that's 75. Then you have purchases. Okay. Purchases. So the purchase numbers were 48 and the cost was 75. So 48 times 75 is equal to 3600. So it is 3600. And then you have purchase returns. That was none here, so nothing, 0. Okay. And then you have the closing inventory. So closing inventory, okay, the cost was, the number was 15 at 75. That is 1125. Now we have to find COS, the cost of sales. So 75, okay, 75 plus 3600 minus 1125, that is 22550. Okay. Now the gross profit is going to be equal to this minus 3920 minus 2550. So the value is 1370. So the value is going to be 1370. Now let's calculate the gross profit. Okay, the gross profit is percentage is going to be 1370 divided by 3920.